Aloha, everyone. Joshua Hayes at BigWaveTrading.com. I just drank a big, giant cup of coffee, so let's get at it. So on Monday, we had what I called, to all members of BigWaveTrading.com, a half follow-through day. We had lower volume across the board. SPY, QQQ, and this is all I care about right now, CompQX, New York Stock Exchange for the S&P 500 volume. So we didn't have the volume confirmation. We had the price move, but then I also told everybody that's not the follow through day that I normally see that's legit in a good, healthy market. This follow through day looks like a bear market follow through day if we're going to count it because of the volume. Now, because of the volume, I told everybody I need to see another real follow through day with us holding this low to count this as a legit follow through day. The very next day, we got even a lower volume, smaller intraday range, move higher. And as you can see on my charts, you got red bop with that move higher. QQQ came with red bop on the move higher and even lower volume. This was skewed. On top of that, there was no brand new leadership with huge earnings and sales growth, beating on the top and bottom line, fresh merchandise. Nothing was out there whatsoever. So, as we end Friday, no surprise, we are rolling over already on heavier volume. Big distribution day on the QQQ, big distribution day on the SPY, but we are still holding above these lows. And I'm telling you guys, there's a lot of people bearish right now, but it's not across the board bearishness. If we undercut these lows, print this kind of candle bar on even heavier volume, I'll welcome another new potential rally attempt. But as of right now, because we undercut the lows of the follow through day, this follow through day was negated, and that put the rally attempt under pressure. And following today's session, it's even worse. It looks really bad out there. Now, I don't know if it's going to roll over completely and just fall apart now, or if we're going to chop around and slowly move lower. But I will tell you guys this, it is looking like this could develop into a cyclical bear market just like in 2022. I'm getting some monthly sell signals that I haven't received since the 2022 top, but we're not hiking rates. We're not going from QE to QT. So I am not selling in my long-term portfolio. I am basically all cash on the swing accounts. I'll let you guys know exactly what my books look like right now on the swing side. So first off, if I didn't live on an island in the middle Pacific Ocean called Maui, and if I lived, let's say, in New York City or where I will be eventually moving to, St. Paul, Minnesota, in about 3 to 5 years, that's about the time frame, but I am definitely leaving Maui when I get a final round of surfing in. I'll be going back to day trading during market environments like this. But right now, it's not worth it waking up at 2:30 in the morning. We don't have every day clear, clean 100 to 500% runners every day that have multiple follow-throughs and that close at the high of the day. So waking up and destroying my life at this age doesn't make sense to me. So on the swing and position side, I'm basically all cashed up, patiently waiting for brand new merchandise to set up. And let me tell you something. When it sets up, I'm going hard. In fact, one stock is on the books right now that if it would happen to trigger and fill, would get 25% of my account capital placed into it alone. So right now, cash heavy on the swing position side. Quarterly portfolio is the quarterly portfolio, guys. I've always told you the February to May quarterly portfolio period is the weakest quarter. The November to February period is the strongest. It's no coincidence that the strongest quarterly portfolio 3-month time period leads to the weakest one. So nothing is abnormal. I have 10 stocks, 10% capital in each, and I hold for 90 days. It is what it is. Whatever losses I will take in this quarter will be made up by all of the future quarters until the day that I die for the rest of my life. So I'm okay with that. Long term, I have a game plan, and we'll review that when we look at the telechart version 25 charts. So I'm going to be buying on the way down. I'm not going to be panic selling. But speaking of panic, Here's my issue right now. After a 10% decline, we may have the AAII survey showing more bears than bulls, and showing more bears than bulls from a time that, like, for a length that we haven't seen since 2008. The II survey may have more bears than bulls currently, but the NAAIM survey still shows, I, I don't know what the most recent reading was, but I think it's 65%. Historically, that bottoms around 15%. So we're nowhere. I need all three lined up. I don't have all three. I have two of the three. But the most important, I would say, metric is after a 10% decline, I need to see fear and panic and capitulation in real money markets. What's real money markets? The VIX is one. Excuse me. The VIX is one. And the put call equity ratio is the other. Now, intraday today, the put call ratio, equity put call ratio did tick over one, but it's not like it ticked over two. It ticks over two intraday all the time when you have panic sell offs. It ticked over one early in the session and closed at 0.91. So that means there was more fear at the beginning of the session at 10 a.m. than the close at 4 p.m. And look at what the QQQ and SPY did, which tells me people are still buying the dip in the equity put call, or else it would have closed at 1.5 following today's session. No fear, no panic in real money markets equals no bottom to me after a 10% correction. And the biggest problem I have is this VIX. This is panic. This is even panic. That 1 day bar right there. This is slow and steady. Today, still no panic. No panic, no fear after 10% market correction in cash markets, no bottom. So I just think that, and remember, I've been telling you guys, I believe we have another leg lower. I actually welcome the next leg lower because I'm going to get to work in those long-term portfolios. Like I said, in the top of 2022, we went from QE to QT. We went from rate cuts to rate hikes. Right now, we're going from rate hikes to rate cuts. We're going from QT to, according to Polymarket, in May, 100% odds that we will no longer have any QT. What's the Fed know that we don't know, huh? So we're going from QT to QE, rate hikes to rate cuts. It's the exact opposite of the situation in 2022, where I was selling my long-term portfolio, 50% of it. Always hold 50% because you never know. Long-term, these are 5 to 20-year time horizon for me. Long-term holds. Companies like Google, Microsoft, DoorDash, Uber, things that I have conviction on in the long term. Tesla, Taiwan Semiconductor, things that I have long-term conviction on. I was selling in 2021 because hikes, cuts to hikes, QE to QT, 2025, QT to QE, rate hikes to rate cuts. I'm not selling. I'm only adding on the way down. But before I tell you what I'm going to do in my long-term portfolio, we'll end looking at these charts with what I'm doing on an end-of-day basis on the swing side. So I have one 50% sell signal today from a stock I recently went long, EQH, for a whopping, rounding up, negative 2% loss. That's the only liquid name. The 100% sell signal is for a whopping negative 5% loss. And it was so thin, so illiquid, I told everybody that's a member of bigwaytrading.com to not touch it. So it doesn't matter. These are the stocks that have made my scans today that actually look good on the swing side. DTE, Z-Lab, LPLA, LGCY, and my personal favorite, because it's now an earnings winner, BKTI. This is one of the best looking charts that I have. There's no red bop whatsoever in this chart. Relative strength lines near the highs. I only see accumulation in this. If we do happen to have a follow through day, I would love for this to build a handle, have that 50 SMA come up and touch the low price, give me a pocket pivot point signal, and I'll be definitely buying this stock. But I'm not going to do that yet. So what's going on right now for me on the books? I have 3 swings currently. RSG, a pollution control name, and you can see it's working. My final stop is right here, already taking gains. I know it's like nothing, right? But that's the market environment we are in. I have AXS on the books. My final stop is the 50 SMA. Now a close below, not a wick below, a close below the 50 SMA. That's my final stop. And then PRCH. And PRCH's final stop will also be the 50 SMA, a close below it. But you can see RSG, PRCH, and AXS are still green for me and still higher. What's on my books right now that hasn't filled? I'll be straight up honest with you. NVS. Buy stop is above this high. It will trigger over 113.38. You can see we came close today. Haven't quite triggered it. But I like Novartis, and I really like it because it's not USA based, which right now is risk off. But NVS is on the book, and the only other one on the book is also non-USA based. And this is the one that if it triggers and fills above this high, the initial long signal came, I believe, here. Right here is when I decided to call on this trade because I wanted to front run a potential breakout. Pulled back, never failed below a close below 101.54. So it's still on the books. But if that triggers and fills, 25% of my account capital will be in FUTU. By the way, love this ticker symbol. It's basically telling you FU to you. So that's it for the swing side, but that's my books. FUTU's on it. NVS is on there, not triggered and filled. PRCH, AXS, and RSG are the only 3 stocks I am long. So now what I want to look at is a SPY, because now we're going to talk long-term portfolio. This low right here is just to show you what this recent September low is. This is not where I plan on getting to work unless the 500 EMA catches up with this level. Then more than likely, I'm going to buy some SPY and QQQ. SPY and QQQ gets down to here, which if you don't know why the 510 level, it's because it's right here. It was acting as a bunch of support, then it became resistance, support again. I will buy some in my long-term portfolio if we get here. Where do I ultimately think we're going to go? Well, if we have to correct the entire move once we broke out past those early 2022 highs, I believe 479, 480 is our stop. We get down to 480, whatever cash I have on the books, a close below 480 and a reclaim, all in with a stop below the recent low. If I miss that, the next buy becomes a reclaim of the 500 EMA, which means I just missed the bottom. Just like I said, 350 would be the low in 2022. Missed that because it only happened intraday. So I had to figure out how to get heavily invested and piecemeal back into the market on the long-term portfolio. Managed to do that. But 480, undercut, reclaim this level, all in with the SPY. And if that doesn't happen, an undercut of the 500 EMA that's uptrending in a reclaim, all in. Now, if the 500 EMA flattens out or rolls over, a reclaim of the 500 EMA is the first step. Going back to here, I will then need to see us make a series of higher highs and higher lows first. So this reclaim, no series of higher high and higher lows. No series of higher high and higher lows. Now we have a higher low. Now we have a higher high. Now when we reclaim the 500 EMA, it's actionable. And that's my game plan moving forward. I hope everyone learned something from this video lesson. I hope everyone's not panicking out there. I will remind everybody on the swing side in this tape, after this session right here, I went from being 200% long to less than 100% long. And when we hit new highs here, I told everybody the market's hitting new highs, but yet I was 200% long here and I can't even get 100% long here. So at most I was about 50 to 80% long. And as the market started to sell off, quickly almost all cash. Right here, now all cash, basically, besides those 3 stocks and a few others that have triggered and filled throughout that area. And then in early February, I posted in my chat room, time stamped and all, early February. I think it was February 2nd. If everyone is bullish this market, if everyone is long this market, who's left to buy? Well, we found out. So if you've learned anything in this video lesson, please like and subscribe. And if you can, if you know anyone that's having a tough time with this market, share it with them. Hopefully they can learn something from it. But the one thing I don't ever do is panic, ever. I never FOMO to the upside. I never panic to the downside. I try to develop game plans for any and all conditions based on historical precedents. That's all I do. All right, everyone. Have a wonderful rest of your weekend. Buckle up. It's going to remain interesting until the tariff news headlines go away.